without further ado, I'm here to introduce my good friend, our good friend and partner, and he's here with us tonight. So, Tim, all yours.
Thank you, Bassem, and good afternoon, good evening, and perhaps even good morning to everybody on the call. It's a pleasure to be here. My name's Tim Hayward. I'm the Managing Director of Walton here in the Middle East. I'm based in Dubai. I've been with Walton for just gone through my 17th year anniversary, in fact. So it's been a long time. And what I'm going to do is take you through what I hope will be an informative slide deck, which will introduce you to our Walton Land Finance model, which is a fixed income strategy. And as we go through the presentation, I hope it will give you a good and clear understanding of the opportunity. But before I do that, I'm going to just introduce the Walton Group, and I'm just going to turn off my video as well so that you can focus and concentrate on the slides themselves. I will, if this allows me to stop my video. There we go. Okay, so Walton is a land asset management specialist company. We have been in business for now 45 years. As a land asset management company, we administer a large acreage of land in North America. We are US centric. We have around 90,000 acres of land across North America, translating into about $4.3 billion of assets under administration. We have a large client base globally, around 91,000 clients globally, and we raise capital on a global basis into different land-based investment strategies. To date, we have returned in excess of $2.5 billion back to our investors, and that includes individuals, ultra-high net worth clients, family offices, institutions, as well as pension funds. And again, we structure land-based investment deals for those different investor groups. This is not new to us. To date, we have fully exited around 41,500 acres, comprising some 311 fully exited properties, as well as partial exit activity on another 40 properties. And we continue to manage and administer around 143 master plan communities across the US and Canada. So tonight I'm going to introduce you to our Walton Land Finance product. And Walton Land Finance is, I guess, a hybrid product of a couple of our different land-based strategies. It is a fixed income strategy, and it's offered on an open loan structure. So Walton Land Finance is a fixed income strategy. It is an open loan to the Walton entity, the borrower being a Walton Land Finance LLC entity, each series being around $10 million US. We are currently raising for our 7th series. Each individual series would be numbered WF07, 08, 09, etc. The term is structured as a 3 + 1 + 1 year term, but effectively it's a 5-year investment, or a 5-year loan, I should say. The reason we break it down to a 3 + 1 + 1 is because the interest rate payable, which is 8%, which is paid current, is 8% in years 1 to 3. And then there is a 25 basis point ticker for year 4 and year 5. So it goes up to 8.25 year 4 and 8.5 in year 5. Although the +1 + 1 year time frames are optional, it is at Walton's option, and we fully expect to utilize the full 5 years of the term. The reason being is because of the underlying assets held within, which you will see as we go through the presentation. And so we believe that 5-year strategy and structure is appropriate. But it comes obviously at a premium for lenders. The minimum amount is $50,000. And one of the beauties of this structure is because of the way that it is structured as, of course, debt, there is no tax liability on the structure whatsoever. So it enjoys a portfolio interest exemption in the US, which means it is not subject to withholding and it is not subject to any kind of capital gains tax upon exit. So it's very clean. What that also does is it opens up the opportunity for business investment or business loan. So if you are a business owner, if you are an entrepreneur who runs a business and has retained capital within the business that is not working particularly hard, then this is a strategy which you could potentially employ to get some of that capital to work. The reason I mention that is because in some of our other strategies, which are taxed in the US, they attract a fairly punitive rate of tax as a corporate, so it just doesn't make sense. Circa 21% on the corporate tax side, and then an effective rate of tax with a branch profits tax in the US, which would take it up to around 42%. So this structure, this strategy is very, very tax efficient, and in fact, tax neutral. The security of the investment or the loan is a pledge of equity of 100% of the equity interest in the Walton Land Finance entity. And the pledger is 66 Knightsbridge Holdings, which is the parent company, the hold company of the Walton group of companies, which is why I shared with you the numbers earlier in terms of the Walton group. Structurally, the lender is lending into a Walton Land Finance LLC entity, and that is a wholly owned subsidiary of the pledger, which is, as I say, 66 Knightsbridge Holdings Limited, the parent company of the Walton group of companies, and the pledge is therefore between 66 Knightsbridge and the lender itself. The interest rate payable, 8% per annum years 1 to 3, 8.25% in year 4, and 8.5% in year 5. The Walton Land Finance entity is then deploying the loan on a 60-40 basis. 60% is going into the builder land finance model, and 40% is going into our exit-focused pre-development land model, which I'm going to go into some detail of as we go through these next few slides. The security is, of course, the wholly owned subsidiary of the Walton group of companies, parent company, 66 Knightsbridge Holdings, the equity pledge, which is in place. And as I say, the loan is going to be deployed 60% into the build land finance model and 40% into our pre-development land strategy. The pre-development land strategy is where we go out and we research and acquire land in the path of growth of major urban centres. We secure interest up front from typically a top 10, top 20 publicly traded home builder in the United States in the form of an exit-focused letter of intent, which of course, as we understand, does not guarantee anything. But what it does do is it provides assurance to the home builder that they are the only group with a seat at the table, and it gives them great comfort and exclusivity to continue to work with us to move those assets through the entitlement process, and then basically look to buy that land from us on a phase-by-phase basis. Part of the strength of that strategy is that there is direct title ownership, freehold title, which is held by the Walton Land Finance entity. The ownership is on an all-cash basis. There's no debt, no borrowing on the land, and of course, it goes through a very stringent due diligence process, as you would expect, in order, firstly, of course, to mitigate risk, but secondly, to attract those home builders who are going to sign a letter of intent on the project. And as we work through the entitlement process with the home builder, hand in hand, we of course enhance the value of that property. The builder land finance side is an exclusive arrangement which we have in place with the largest publicly traded home builder in the United States, namely D.R. Horton. The beauty of that structure is that it is exclusive. We have an exclusive arrangement with them. And again, you're taking title ownership on the asset, which is identified by D.R. Horton themselves for their own short-term development pipeline. And that is then being replaced once they exercise the option agreement with a corporate covenant from a publicly traded, listed home builder, investment grade rated. They are paying down a hard deposit upon acquisition of the property, and they continue to pay us an interest premium all the way through the term. So we're very comfortable with that strategy, and I'm going to go into a bit more detail on that in just a second. So the underlying investments themselves, we'll start with the Builder Land Finance Program. The Builder Land Financing Program is an exclusive arrangement, as I've said, with D.R. Horton. For those of you that are not familiar with the US home building space, D.R. Horton are the largest publicly traded home builder in the United States. They have been the number one home builder by volume for the last 20 years. They have around $35 billion in revenues, and last year closed around 90,000 homes across the US. And importantly, they are investment grade rated, Baa1 by Moody's, BBB+ rated by Fitch. And the Builder Land Finance strategy was brought to us by D.R. Horton. Around 3 years ago, D.R. Horton came to us and said, look, you're selling us and providing us with an awful lot of land to meet our future development pipeline, but we also acquire land on a short-term basis, land that we know that we're going to need to develop within the next 2 years. And so they said to us, well, would you be interested in holding that land for us, and we will pay you a premium for doing so? The reason they do that is because the industry as a whole has gone down a more land-light strategy, where home builders, they don't get rewarded on Wall Street for holding too much land on their balance sheet. And so what you've seen is a shift in priorities. And the way that home builders in the US now secure medium to longer term land is typically through an option agreement, because they still, of course, need to fill their pipeline of future land, which they can exercise an option on and start developing. But of course, they don't want to tie up too much land or capital on their balance sheet where they can't turn a profit on it. And of course, the way they can turn a profit is by building and selling homes. Until they do that, they don't earn their profit. So we agreed terms with D.R. Horton, which basically said, as they went through their due diligence process on the land that they're looking to secure for short-term development, they will bring that land to us and it will go into our buy box. Now, one of the key criteria is that before it comes to our buy box, it must be fully entitled, fully zoned. There is no entitlement or zoning risk whatsoever on the asset. And upon that, then we will consider it. Now, we don't just take D.R. Horton's word for it. We conduct our own third-party due diligence as we would do on our normal course of business. We work with engineering consultants, land use attorneys, obviously market analysts. And if we are content with the asset, then we will give the green light to D.R. Horton. Now, we call this internally our 15-15 program. The reason being is because upon our green light, D.R. Horton will pay a hard deposit of 15% of the purchase price. That is non-refundable. They then continue to pay Walton 15% current interest, which is paid semi-annually. And there is an option period which may be up to 24 months, but on an asset by asset basis, we are basically looking at those assets. And so far, we have looked at assets that have an option period of less than 6 months. We hold title to that land until such time as they exercise the option, at which point we transfer title to D.R. Horton, and in its place, we receive a corporate covenant from D.R. Horton Inc. And that is a corporate obligation on their part to pay all interest and principal repayments due on the asset. Now, you notice here it says there's deferred payment premium. That is simply because you've got an option, the option period, and then after the option period, all the way throughout, 15% is being paid, whether it be the option maintenance premium or the deferred payment premium. The principal repayment is made as they sell homes. So that is on a pro rata basis as each home is sold. And there is an outside repayment date on every single asset. So there is, again, a reason why we're very comfortable with that 5-year term. If D.R. Horton, for any reason, failed to exercise the option, which again is highly unlikely given the fact that they've conducted significant due diligence and research on each and every asset, and they're in their buy box already. But if they did, we keep the 15% deposit. We've therefore picked up an asset at 85 cents on the dollar effectively. And we then work through a process which will either be to get back around the table with D.R. Horton and see if we can't work things out, or we will go out to the market and to our other home builders that we work with and look to sell that asset off or restructure it with them. Or, of course, put a big for sale sign up because we've picked it up for 85 cents on the dollar and we'll be able to sell it to the market. Or through our network, we will just simply refinance and restructure it. Again, that's important because of the 41,500 acres that we have exited to date. This is not new to us. We know what we're doing. Now, when this strategy was put in place about 3 years ago, we knew pretty quickly that we were going to have to go out and build a track record. So what we did is we went out and raised $100 million with Fortress Investments out of New York. And we ended up placing about $122 million with Fortress into this builder land financing program. So we've attracted institutional capital into the program already. We continue to have discussions with various institutions, pension funds, sovereign wealth funds, and the like, who are very interested in this builder land finance strategy. And it is very much a rinse and repeat strategy. D.R. Horton have a pipeline with us of just over $500 million. So this is something which we will continue to feed into. The program itself, the Builder Land Financing Program, again, just as a reminder, where 60% of the loan proceeds are being allocated into, has built very nicely over the last number of years. We've actually now deployed over $200 million into this program, and you can see how this has continued to grow exponentially over the last number of years. The projects which have been acquired, this is not quite up to date, but it gives you a good understanding and a good picture anyway. All of these individual assets. And a couple of things I'm going to highlight here is the duration on these assets, you can see, has been fairly minimal and below that 5-year period for the most part. You can see also that a number of these projects have gone full cycle. So they've been fully built out and all the homes sold in them. A number of them are actually at the home sales stage. And then a good number of them are in the development stage as well before home sales activity will begin. The other thing to note is the number of months before the option has been exercised. And again, because of the buy box criteria that we are putting in place, although the facility allows for up to 24 months, we are looking at assets and selecting assets that have got a much shorter time frame and duration that you see here. So that on-risk period, if you like, before the option is exercised has been largely mitigated as well. The typical project features that we look for in this buy box is typically a lot count of between 150 and 400 homes. The typical funding amount between $5 and $30 million. Of course, that will depend on the individual asset. Land development is to commence within 18 to 24 months, and then home sales activity from 24 to 36 months, with a total project duration of 4 to 5 years. Now, this home sales activity is important because the principal repayment will start the moment homes are being sold. So you can see that the principal repayment here, because of the open loan structure, is going to kick in from around 24 to 36 months. So 2 to 3 years is reasonable. The geographic diversification of the pipeline of build land financing projects is shown here. Again, it's a pipeline of over $500 million with D.R. Horton, and we will continue to work through that and select assets accordingly and deploy capital as is needed. Some examples of these projects: they are very much infill assets, so they are in amongst existing development. Verano is a project which is over in California. It was acquired in August 2020. It was fully completed by March 2022. Garrett Sagewood, once again, over in California. They're not all, but these examples are. Acquired in November 2020, completed in June last year. Moreno Valley, similar kind of picture, acquired in February 2021, fully completed in July 2023. And River Oaks, acquired in September 2020 and is expected to be completed by the end of September this year. So once again, just gives you an understanding and an idea of the kind of assets that are being acquired within this portfolio. Now, 40% of the loan is going into our pre-development land model. And our pre-development land model is where we have an identified asset, where we have a signed letter of intent from typically a publicly traded home builder, but not always. This is an example for you, a project called Robin Hood, which was about 100 acres just outside of in the Maryland market. The home builder on this project was Lennar, the second largest home builder in the United States. And this had an exit strategy of a phased exit between 2025 and 2028. The home builder Lennar, the second largest home builder in the US, as I mentioned, ranked 131 on the Fortune 500 list. They're actually in the top 120 now, I believe, or just outside the top 120. As you can see, there's still a vast number of homes being sold, 66,000 homes in 2022, and also investment grade rated. The letter of intent, which gives them exclusivity on the asset, actually also included a summary of terms. So you can see here exactly what we were getting into. We knew exactly what those terms were looking like. And so we were very comfortable, again, moving forward on this asset. The cash flow projections on the project itself, on the Robin Hood project, were on a phased basis, but with a large proportion being payable upfront upon first closing in 2025, and then the balance being paid over 26, 27, and 28 as the homes were sold. So that asset was expected, or is expected rather, to generate a multiple of about 1.78 times and an IRR of around 21% per annum. Once again, we have a diverse range of projects which will be allocated into across the US, but also importantly with different home builders. Some may be D.R. Horton on this part of the program, but more likely the likes of Lennar, Meritage, Dan Ryan Builders, and others as well across that top 10, top 20 spectrum. And this model has worked very well for us on the Walton, on the EFPDL side. This is a little bit outdated, but we've now syndicated in excess of 7,000 acres, and the return multiple has been between 1.37 and, in fact, now 3.4, 3.5x on a multiple basis. So again, this slide is a little out of date, but it gives you the idea of the strength of these assets. Walton land finance model is also, we have a Sharia compliant version of this, which is structured through a commodity murabaha. That is a compliance from Masaref, who are operating out of Malaysia, but they also have a Kuwait office here in the Middle East, and a presence beyond that as well. So we are very proud to carry their endorsement. They have looked at this, and of course, debt and interest do not tick the box for Sharia. But what we have done through the Murabaha finance, the commodity structure, is obviously to work through that and create profit and meet the criteria required to carry the Sharia endorsement. And details of that structure can be provided separately. I'm just covering the high level aspects today. So the Masaref Sharia advisors, you can see here, well versed, very well experienced, and again cover different markets, both in Singapore, Malaysia. We have a strong presence in Southeast Asia, but also over here in the GCC with the Kuwait presence as well. So the Walton Land Finance structure, as you can see here, based on a $100,000 loan amount, the proceeds after 3 years, the multiple will be around 1.25x. After 4 years, based on that higher 25 basis point ticker, 1.34x, and over 5 years, 1.42x. I should add that the biannual payments are on the 31st of January and 31st of July each year, and any principal repayment will also be made on those dates as well. Now, again, this is not the first time we've done this. We are now raising for WF07, so our 7th series. Each series is around 10 million US dollars, and this shows you an example or examples which are structured slightly differently. They're more on a 50-50 basis, but our Middle East model is, as I say, a 60-40 basis, 60% going into the Builder Land Financing Program with DR Horton, 40% going into the EFPDL model. This just gives you an understanding of the kind of allocation across the different assets. So you can see here the EFPDL models, no major exposure into one particular project, so giving great diversification, not only in terms of geographic location, but also home builder diversification as well. And then the financing structures in there as well. Now, just to give you an understanding of what this looks like from a distribution perspective, of course, you can see the interest or, of course, the profit being generated here throughout. But what you also can see, because of the open loan structure, is the principal repayment is occurring within that time frame. So because of the nature of the underlying assets, and as the homes are being sold, or the land, of course, is being sold off to the home builders, then the principal repayment is being made throughout. Again, we have no interest in retaining capital. We are looking to pay down the principal as quickly as possible. WF02, fairly similar. Once again, the principal repayments coming throughout the term up until the maturity in 2028. WF03, and once again, you can see the structure here. And then 04 and 05 have not been updated, but these are now fully subscribed, fully allocated. And again, we don't have the cash flow on these, but you can see the idea here as well. And WF05, when we put this slides together, was just being raised. It's now fully raised, and we are now on to the closing of WF06 and raising now for WF07. So in summary, the Walton Land Finance structure and strategy really offers a very nice US dollar fixed income rate of return, which is paid semi-annually. Minimum investment is $50,000 with interest payment or payment dates rather January 31st and July 31st each year. It is structured over 5 years with a 3+1+1 year structure. But again, I think, as long as you understand that this is an open loan and those principal repayments will be made throughout from about year 2 to 3, in fact, I'd say year 2.5 to 3, then I think that's palatable. One of the beauties is there is no tax payable whatsoever due to the portfolio interest exemption structure. And as I say, we have the Shariah-compliant version as well, which is available. And there is a $15 charge on top of the loan amount for that Murabba financing structure. And that is purely because it has to be done through the Masref platform. It can be held in single names, joint names, or under a corporate name. And again, because of that tax exemption, it is beneficial. And the final part here is this is for professional investors only. So any investor coming into this will be required to sign a self-declaration that you meet the professional investor criteria or sophisticated investor criteria. That is it from me. The final thing I will just say is that we also do have our own Walton client app, as well as a corresponding web portal that does allow clients to view their holdings, to receive statements, and of course communications and updates on their holdings. Our business partners and my good friend Bassam has a business partner login as well, so he can see all of his clients in one place, and again can access the same information in terms of project updates, statements, etc. So with that, thank you very much for your time. I appreciate it, and I'm happy to answer any questions that you may have, or of course that Bassam wishes to pose as well.
All right, Tim, thank you so much. Really great information, very well put together, everything, the investment and the presentation and everything. And as a matter of fact, I have clients with you for a while. We're just talking about it. We were talking about them an hour ago. Quite happy with everything that's happening and the regular updates that they get. Typically after the webinars, I get a couple of questions that they have been addressed within the webinar, but I just like to set them aside as a point of reference. And without getting into the deep technical part of it, the most actually important question that investors ask for, well, two questions. One related to taxes, and you made it very clear, we understand. And the second question that always come is the security. What type of security that we have, for protection? Without getting, too technical and too deep, can you just run the security part by us once again, Tim? Thank you.
Yeah, no problem, Bassam. So the security is in the form of a legal pledge of equity, which is a pledge of equity provided by 66 Knightsbridge Holdings, which is the parent company of Walton. But the pledge itself is a pledge of equity of the assets held within the Walton Land Finance entity itself. And so those assets will be the title of the land being held. In the case of Builder Land Finance, once the option is exercised and the title is reverted back to D.R. Horton, then that title is replaced by the corporate covenant from D.R. Horton. And therefore, the other equity, if you like, within the Walton Land Finance entity is the contractual agreements with the respective home builders. So across the board, and with that pledge of equity, which is ring-fenced for the individual Walton Land Finance entity itself, that provides the protection for investors, or lenders, I should say.
Thank you very much, Tim. I guess everything was quite clear. I don't have any questions. I'm just looking at the chat here and the Q&A. I'm not seeing anything. So we don't have any other questions. So Tim, I really thank you very much for taking time to be with us this evening, or this afternoon, or this morning, depends where the audience are in the world. I really appreciate the information, and putting it out there. I guess if any of our clients interested to get to know more details or have questions, would you be available to sit in with us and talk to us?
Yeah, absolutely, Bassam. I'd be happy to. So any interest or any questions or a follow-up required, please just reach out to me and I'll be very pleased to join.
Thanks, Tim. Thank you very
Pleasure.
much. Thanks
Thank you so
everyone for
much.
being here with us today, and I wish you all a fantastic rest of the day. And please, if you have any questions, you know how to reach us. Thank you.
Thank you, Bassam. Thank you,
Thank
everybody.
you, Tim.